And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to my futures family. It is time for the market prep. Wednesday, March the 22nd, FOMC day, the day we all hurry up and wait. We're going to be seeking accurate context this morning, seeking good risk management, and always remaining patient in our trading today. If you're already in the markets, probably not that much going on for you, but we do hope that things are going well. So, this morning, the 30-year mortgage rate actually dropped a little bit. Last week it was 6.71%. Today, 6.48%. 9:30, we're waiting for the EIA petroleum status report, the crude stocks here in the U.S. 1 p.m. Central, the FOMC announcement due out. Many folks speculating it's going to be a 25 basis point rate hike. 1:30, of course, Chairman Powell will be having his press conference. So U.S. stocks largely going to be opening steady as the FOMC announcement looms. Fed finds itself torn between inflation and a somewhat fragile financial system as far as the banking system is concerned. Excuse me. A 25 basis point hike is probable as the Fed is hoping not to scare investors, perhaps encouraged by some of the stresses on the banking system easing for now, and Yellen's promise yesterday of more government help if needed. Crude price pullback rally is stymied a little bit by the 3.5 million barrel boost announced by the API last night. EIA is still expecting an estimated drop in crude stocks here in the U.S. by about 1.5 million barrels. The VIX this morning up slightly from the close, lower than yesterday at this time. It's currently 2162 last I checked, up slightly on the day, but down from the 2283 at this time yesterday. The dollar index just pretty much flat where it was yesterday. Yesterday at this time it was 103.1. Today it's 103.07. No major changes there. And the yield on the 10-year up a little bit this morning, 3.63 last I checked, 3.56 same time yesterday. Please make sure that you hit the lucky like button. Share, comment, question, feedback, commenting, and love are always welcome here on the Market Prep. We're going to ask that you subscribe to our YouTube channel so you can get notifications when we do go live. Speaking of which, I'm going to be pushed out of my office and working on getting into my new home office. So I'm probably going to have to take my whole desk down after the prep this morning. Got a desk going to be set up here at some point today or tomorrow. I'm looking forward to being back with everybody strong. On Friday, I'm going to be asking John Doherty, our good friend that you saw last Friday, to handle the market prep for everybody tomorrow morning. But unfortunately, probably going to be losing my desk and losing my internet for the better part of the day today, and then I got to get things set up and everything for the future. So again, probably won't be doing anything live tomorrow either. So that means today, unfortunately, no group coaching, no make whole money, and no market reflection, which has been difficult because we've got a lot of work going on here. So again, today, the prep is going to be it for me until probably Friday morning. I don't know how long all of this stuff is going to take, and I've got to reset up everything. So it's going to take me a little bit of time. But again, we'll have our good friend JD on the market prep tomorrow. maybe he can do a reflection for everybody today. I don't know. We'll see. And again, we really want to be consistent with all of this, and we're making changes to make things even more consistent and helpful for everybody moving forward. We're looking forward to having some really good, beneficial changes for the market prep and make Hogue money and everything. Very, very soon. We're looking forward to opening up Top Step TV. Yikes. But we're really looking forward to it, and we hope that you are too. All right. It's about the same here, Stephen, looking at your comment. Got to say good morning to everyone. Jay is first in the room winning the prize. Brian, Dan Trader, good morning. Hegel Matters. We did have some late spike action yesterday. We're going to see that in the charts, and we're going to have to deal with that on the open. And if it were any other day, if it was a normal day that other than an FOMC or a CPI day or something like that, I would be looking a lot more into what those mean. But I'm thinking today with the FOMC, number one, I'd probably see some relatively muted markets before then. And then, as always, on the market prep, we talk about the fact that ACH, anything can happen. So it's going to be an interesting trading day. I unfortunately won't be able to be involved probably through the better part of tomorrow as we get things fixed and set up here. So I'm going to be maybe taking a couple of days off from trading, but I will be watching, and I just want to make sure that I'm in my normal environs when I'm engaging in the marketplace. So maybe a couple of days before I'm able to really kind of re-engage in the markets. But I will be watching. And again, we'll have JD for the market prep tomorrow. Good morning, Timothy, Urban Cowboy, Jason, John, my brother Rick, Randolph, love you. I'm going to miss you for Make Hogue Money today and tomorrow. Thinking tomorrow I will not be able to do Make Hogue Money, but we're going to get things back to very stable as soon as we possibly can. Bill, good morning. John, where do I get the New York Stock Exchange volume stats from? This is a link I'm going to put into the chat room to the Dalton website, who shows you throughout the day how the percentage of volume, if it's greater or less than the previous day. It's a great website. Jim Dalton is the godfather of market profile, and so, but that's one of the tools that I use to kind of look at the overall volume on the New York Stock Exchange. Good question, John, and there's the link for you. Make sure you bookmark that and keep that browser open for you're available to see how volume has changed throughout the day as compared to the previous day. Dr. VJ, good morning. Don, Kevin, good morning. Travis, good morning. Roberts, Jimmy, Sarah Hall, prayers and love to you. My guy Vince with us this morning, good morning. Shy T, Rusty Golfer, Shaw, Joe, good morning. Anissa, Stocks, COVID, good morning to you. Zorain, good morning. Alejandro, Zach, good to see you. What happened? Well, not sure what you're talking about, but I am going to be, if that's what you're talking about, I'm going to be off for a couple of a couple of days here. While Stephen, good morning. While J-Man is saying getting a new office space in my home, getting things set up for that. So that's going to be. I'm looking forward to it. I think it's going to keep my focus a lot cleaner and sharper throughout the trading day, the weeks, the months, and the years to come. Miami or Miami, good morning. Taurus, Pete, Grounds Hero, good morning from Sheboygan, Wisconsin. Sheboygan. I have family in Wisconsin, kind of the Milwaukee, Slinger area and the Lake Geneva area. Top Step Radio. We're going to be expanding the amount of time we're going to be spending, Joe. We're going to start at 7:45, probably, maybe 8 o'clock. With the prep, we're going to go straight into Make Hogue Money every day, Monday through Thursday, I believe. And we're going to keep the party going with some interviews with traders, guests, some regular segments with some of the folks here at Top Step. We're going to have our good friend Eddie Horn on here talking about the coaching, the free coaching, and a few other things. And so we're going to be expanding the amount of time and hopefully the good, helpful content that we're bringing to you. All right. If you lived in your town, you can broadcast from my house. Well, thank you very much. It's nice of you to say that, Stephen, and we're looking forward to continuing to improve what we bring to you guys every day. And of course, feedback is always very important. That the changes that we've made to Top Step, the changes we're currently making to Top Step TV, these are all based on your suggestions, your feedback, your ideas. So keep them coming. 100%. Sarah, yeah, it's going to be interesting. I'm looking forward to having my own space. Right now, I'm doing this from the dining room in my home, and I know my wife is looking forward to having her dining room back. And we've got an extra bedroom now with my daughter moving out of the house for years now, so we're going to take advantage of that space. And when I get it all set up, maybe we'll do a tour. I've got some really good, cool artwork when it comes to trading. I mean, you can see the piece behind me here that's on loan actually from my brother Rick, and I've got a whole bunch of other kind of artwork and cool artifacts from the trading era, from the trading floor era. So maybe we'll do a tour once it's all set. Is there any place you know that lists daily volume points of control? I wish I had a spreadsheet of them. I do not know of any place that does, but you can always set up a spreadsheet of them. Stephen, there's a spreadsheet that I keep every day that keeps track of volume, the change in volume, price, change in price, open interest and changes in open interest, and even end of day delta direction. Now, there was a delta divergence yesterday in the S&Ps that we're going to see, and I think that it was a kind of a telltale sign of what was going to happen at the end of the day. We'll talk about that in the charts. Good morning, JT Irby. Good morning, Kamadash. What do you think of the big win for GME yesterday? GameStop? I don't really pay attention to that. It was more focused on the trading in futures, and then still a lot going on here in the house. No, I'm not taking a break, JT, just for a day or two while I get some things done in the house here and rearrange my office situation. Rick on Wisconsin. Good morning, everyone. Zach Marcello, Grounds Hero. Good morning. You have information shorts on economic news. That's part of it as well. We're going to be, kind of providing in real time news, things that happen, that come up. We're going to be paying a lot more attention to that. It's going to be a crawl that goes along the bottom of the screen where we're going to have quotes going across and news and things and stuff like that. So Lacey does get a chair. I was just thinking about that. I was going to maybe find a new kind of dog bed to put up in the office so she can hang out with me. Stephen, it is not shared online. It is... although it might be kind of a good idea to share it in Google Docs, because when I take time off, I got to go back and find all that information. I can have somebody else do it while I'm gone. Well, think about doing that, and thank you again for the suggestion, Stephen Carlson. Sujit, good morning. Julian, call it a transition. Yeah, that's it. I'm really only moving about 15, 20 feet. JT, you're my coffee too, JT. You guys are all my coffee. I gotta tell you, since I've been doing this market prep and the things that we do here, it's really kept me accountable to making sure that I do my homework. I think I learn more from you guys during group coaching than I could possibly teach all of you. And I can't tell you how much I appreciate all of you hanging out with me, and we're looking forward to having more time to spend. It's going to be, when things were slow in the pit, we stood around and told jokes. When things were busy in the pit, we took care of business. Looking forward to having that opportunity. Robert, nice job. Great job getting your funded account. We're looking forward to your continued success. And we will hopefully hear some more stories of your victories. Yeah, it looked like the day traders got too short yesterday. Exactly, Chad. Exactly. Andy, appreciate you too. Julian, thank you very much. All right, so let's jump into the charts here and take a look at what we're seeing. We've got the equities, except for the Dow, which is a little bit higher, S&Ps and NASDAQ, just peaking lower. We're going to take a look. Let's see. So here's the daily in the S&Ps. All right, so 40.34 weekly kickoff high. The upside move that we've been experiencing, I'm actually giving a B plus. In the face of a lot of uncertainty in banking, the equities have managed to keep themselves largely together, intact, and keeping the price moving higher. It's kind of amazing if you ask me. The weekly kickoff high 30.45 is going to be pivotal today as it was yesterday. Stopped short of it on its first attempt yesterday, another attempt at it, pushed price higher, and it was kind of a telltale type of situation because we had negative delta, and we'll talk about that on the 30-minute chart here shortly. So we had a 16,000 estimated increase in open interest yesterday. Volume lower. Well, doesn't it make sense? We know that there's going to be a big announcement today. So as that announcement gets closer and closer, fewer participants are interested in taking new positions. Although we did add 16,000 in open interest yesterday, that's going to largely be a hedge. And we think that the longer time frame traders hedged using S&Ps to the long side yesterday, creating the short squeeze that occurred at the end of the day. Here's the 30-minute chart. Here's what happened. Well, we finally found 1, 2, 3 good touch points on this trend line. Once it broke out above this trend line, it's amazing how often this happens. When you find a solid trend line and it crosses over a major inflection level, like I was looking at the 40.34 level, the weekly kickoff high, how often the convergence of those two lines creates opportunity. The first time up, we stopped short. What was the high here? 31.50. If you were looking for a zone, it barely touched into the zone to look for a short there, but it brought forth a really nice shorting opportunity. Where did we find our opportunity for a return to? Well, the fact that the market couldn't close the gap. Now we've got this gap signified by this blue box here. The market looked lower, couldn't continue lower. Finally, we had negative delta all day long. So the delta continued to increase in negativity as we even put up this late spike to the upside. So when we have the market decreasing delta, in other words, getting increasingly negative, it indicates that the more aggressive traders are the sellers. They're using market orders to hit the bids, which would usually push price lower, which for a reasonable period of time, it did push price lower. They continued to try and sell, and it seemed like there was another presence in the marketplace because as price continued to push higher late in the day, Delta continued to decrease in value or increase in negativity, whichever way you want to say it. So we end up with the late spike at the end of the day. Well, where did this bar stop? This bar stopped at 40.35.75, one tick from weekly kickoff high, offering another cheap opportunity, but it didn't hold. At the very least, we didn't have to lose much against that inflection level. Then we put in the late spike, the capitulation of the short time frame, weaker hands shorts selling against a stronger buying presence, finished with the late spike to the upside. So by the end of the day yesterday, the delta divergence was negative 18,000, and we were putting in new highs. That to me says short squeeze, short time frame, weaker hands traders, short squeeze. What are we looking at this morning? Apparently I've failed to put the settlement price on here, which was 35.75. I'm going to pop that on here real quick. There it is. Overnight inventory, nothing. So when we open with inside a late spike, the base of that late spike is 40.34, exactly at weekly kickoff high. So this is now a very pivotal level. If it were a normal day, I would say the market is trying to tell us that it is accepting higher pricing because it's likely going to open in the late spike. Opening above the late spike, the highest probability of acceptance of higher pricing. Opening in the late spike, a secondary but probable acceptance of higher pricing. Opening below the base of the late spike indicates potential rejection of higher pricing. But it's FOMC day. We're probably going to do a lot of arranging and a lot of chopping around today. I'm looking for the weekly kickoff level 40.34 to become magnetic, pivotal. Long above, short below is going to chop you up. Don't do it. Market is still in range, above value at an important inflection level on an important day of release. Wait for the initial balance. Focus on the initial balance for extremes throughout the day today until the FOMC announcement at 1 p.m. Then cancel all your orders, take your hand off your mouse, and watch. It could be a nothing burger. I doubt that highly, but we don't know what's going to happen. And as we say here all the time, ACH, anything can happen. Here's the TPO chart from yesterday. Normal variation day, point of control, about TPO point of control. I'm looking at this as somewhat of a normal variation extreme day, but here's our late spike. We're opening in the late spike, acceptance of higher pricing. But, context, big release today. People are going to be hedging and positioning themselves to protect themselves against anything that can happen. Not looking for big moves here before the open. Now, that said, at some point today, there's probably going to be a big move prior to the FOMC meeting because the market loves to make a liar out of me. Loves to make a liar out of me. Sarah, the FOMC release for what they're going to do as far as interest rates are concerned is at 1 p.m. Central. 1 p.m. Central. So if you're on the East Coast, 2 p.m. Eastern. If you're on the West Coast in Pacific time, what is that? 11 a.m. So just be aware, and anything can happen if they do something unexpected. And then on top of that, we've got the good Fed Chairman Powell speaking a half an hour after that release. All right. Take a look at the crude oil now. Crude oil's got a nice little pullback off that low, doesn't it? We've got the open interest increasing overall of 4,900 contracts yesterday, while losing 16,000 contracts in the April contract. There were buyers coming into this market yesterday. Volume wasn't all that tremendous here just yet. But is this going to prove to be a vicious contrary move, or is this a reversal? With the increase in open interest, I'd say the probability of an actual reversal is higher than I would think if this were a loss in open interest, just a short covering rally. It seems like people bought into this, but again, it's still a little bit blurry due to rollover, which is almost finished in crude oil. So I'm looking at that boost, even though it's only 4,900 total, the loss of 16,000 in the April contract indicates that this was a bigger boost in open interest than we see. Again, volume wasn't all that great. Take a look at the 30-minute chart. All right, so we actually, I think, had another late spike in crude oil yesterday. No divergence as far as delta is concerned. We just took us to the beginning of this gap, which looks like we're going to maybe try and complete today. We've opened now with a gap. Well, if we can't close the gap, or we do close the gap but can't find acceptance in range from yesterday, we're going to look for this market to continue higher. With the open interest increase yesterday, buyers may be present here and they may protect this area. EIA, 9:30 Central today. We'll see what happens there. We didn't really have much as far as overnight inventory until just before the open here. We had a very narrow overnight range before this pushed right before the open. And it's now opened out. It's opened above a late spike. Take a look at the late spike here on the TPO chart. All right, so here's yesterday, a normal variation trading day, extreme on either side of the initial balance, neither extreme of the regular trading hour session. Little bit of an anomalous area down here, but here's our late spike. The base of the late spike in 69.67. So we've opened above the late spike. That's a indication of acceptance of higher pricing. Don't forget, we do have the EIA today. What else do we have here? So, I mean, I'm going with late spike rules here. As long as we hold above the base of the late spike, which again is 69.67, I'll be looking for opportunities to buy weakness for continuation to the upside. Here's the NASDAQ. Wow, I mean, this market is so much stronger recently. Of course, doesn't hold any banks. I'm giving the upside auction here a B, whereas the upside auction in the S&Ps is a B minor. We added 2,200 in open interest yesterday. Volume, again, unimpressive, not necessarily unexpected because of the release of the FOMC meeting today. We've closed above the weekly kickoff high. We did that in the S&Ps as well. It's showing through time acceptance of higher pricing. We also have another late spike here in the NASDAQ. Open interest was okay, volume lower, so that's why it's getting a B as far as a grade for the upside auction. Here's the 30-minute chart. So here's our late spike. No real overnight inventory. And if we were to open now, we'd be at risk of opening below the base of the late spike. So maybe a little bit of overextension to the upside here. Maybe a little bit, maybe overbought. There was no necessarily delta divergence here in the NASDAQ. No overnight inventory. Nothing. Right? Here's the TPO chart. So here's the late spike, the base of the late spike, 12,869. 12,869. Now, I saw somebody was talking about the fact that there's a lot of naked points of control down below in the equities. And that is true. Relatively clean to the upside, especially in the NASDAQ. We have to go way back to find anything in the NASDAQ. And there's also another little caveat to that. This is not a very strong low. Now, these charts here, this TPO chart is 4 tick TPOs. It's a full point. But it still indicates the fact that the market was willing to take that next step lower. I'm calling the low yesterday a poor low. So if we can't hold in or above the base of the late spike, what's that tell us? We may kind of come back and check naked points of control this week low. Another TPO point of control. Another volume point of control. Lots to clean up down there. So I agree with you, Stephen. There may be some things to clean up down below. Marika is saying that NASDAQ is up on chips. I think he's talking about nacho chips. All right, let's take a look at gold now. One of my brother's favorite products. I don't know if it was too favorite for him yesterday. But good news is still in the wind here. Yesterday, we lost 6,700 in open interest, indicating that this is more of a long liquidation event yesterday than an actual turnaround. Hey, Lacey is saying good morning, everyone. Yeah, there's a little construction going on. Yep, you guys are hearing all that. I apologize, but now Lacey's going crazy. Easy, girl, easy. Probably means there's a squirrel or something outside the kitchen. Where was I? A little distracting here right now. Not only all of that, the coffee pot just went off. So again, good news in the fact that we've got this pullback. It didn't bring open interest or increase volume. It decreased volume and lost open interest. Now remember, gold is in rollover. Probably tomorrow or Friday, I think, we're going to be looking at the June contract versus the April contract. Yes, that is Lacey's commentary on gold. She must be long. Yes, June has more open interest in gold. However, looking at it this morning, the volume April over June is almost 4 times. So I'm watching the volume. It won't be long before that volume switches over once that open interest is greater in the June contract. Remember, we're going right past May into the June contract. May is kind of an unused contract. They have another word for it, but I don't like the word. So back to gold. Lacey is still howling about what's going on in gold. Lacey, easy girl, easy. Oh, she is so upset. She's been kind of sequestered into the kitchen, and she's kind of an unhappy dog these days right now, but I'll get you out. Hold on. So here's the 30. No real overnight inventory. It's still in range from yesterday. There's plenty of naked points of control below. Still kind of a partially unfilled gap down below. Naked points of control above. I'm going to be really patient in this market today. I'm looking for some sort of base after the pullback yesterday to lean on as a demand level. Here's the TPO chart. All right. Here's the open in range in TPO value. Yesterday was a double distribution trend day with, guess what, a late spike. We've opened in the late spike. That's indicating possible acceptance of lower pricing. The low from yesterday and the low for today, not all that strong either. So, watching this session low yesterday, I think is going to be important, because if we're going to be accepting lower pricing, we're going to want to see price moving lower. Again, it's FOMC day. Anything can happen. If it were a normal day, I would probably be more aggressive looking for something to do early in the session today. But because it's an Abby normal day, not a Hans Delbruck day, then we're going to be patient. We're going to be patient. Be patient, Lacey. Be patient. Be patient. Poor thing. My goodness. She's very upset. 1940 level, Rick is saying, held nicely yesterday. That was the bottom of the late spike. We didn't find out if it was going to hold until the market, in essence, closed regular trading hours session. Let's take a look at the euro and everything else, and we'll get down to business. We got the equity open. I know we want people to be readily available for that. Here's the euro. So again, much like almost the NASDAQ, right, and the S&Ps, we closed above a weekly kickoff high. We have a breakout acceptance through time. Closed above balance. We added 3,800 in open interest yesterday, but again, volume low. Well, it's going to be before a day like today with the FOMC. Keep your eyes, of course, on the U.S. dollar. The dollar has been coming off recent highs lately. Makes sense that the euro has been firmed up a little bit. Here's yesterday's range, very small range. We've got a gap down below. We've got oodles of visuals to target down below. And oodles, yes, is an industry term. So we're kind of opening here and coming back into range and value in a very small range. Last week's high, weekly kickoff high. There's probably some fish in this area, but I don't see any reason to really be in a big rush to get into this. Take a look at the TPO chart. Normal variation day, IB high and low, neither the high nor the low of the regular trading hour session. Normal, balanced kind of somewhat trading day. We got a little bit of a hole in the profile here that may come into some repair activity, but we'll have to see. Lacey, what is back there? Is there some sort of hoodoo's really got her? I do get coyotes back behind the house sometimes. I'm hoping that's not what she is after. All right. Take a look at the 10-year, which is going to be kind of a vital instrument today, don't you think? Volume has been dying prior to the FOMC meeting. Open interest, we added 10,000 yesterday, which I think is largely kind of an inert number for the 10-year. Very volatile range-bound activity going on here prior to the FOMC meeting, and we're relatively centrally located between last week's high and low, and even further is the weekly kickoff high and low. We're looking for some kind of possible volatility here. It's the only levels that I could find that made any sense. So again, anything can happen. Price central. All right, so we've opened with a gap. We took care of one naked point of control down below here. Here's the session yesterday. Range bound largely, no gap close, inability to close the gap. Overnight inventory coming into the session yesterday was short. We did get some reconciliation of that. We opened again today short. We're seeing some reconciliation about that. But again, I'm going to be patient waiting for what happens here at 1 o'clock. Here's the range from yesterday. Normal variation trading day, extending both sides of the initial balance, brings Range bound activity. We've got a gap today, unable to close the gap, checking to points of control. Even though we're out of balance and out of range, I'm going to try and stay patient today due to what we all know is coming out. All right. Natural gas. So natural gas, we're still in the April contract. The April contract has just a slightly greater volume. By tomorrow, I'm fully expecting to be in the May contract. It's in rollover, but we added 21,000 in open interest yesterday against a low. Is that directional? Did we add new longs and longer time frame in this? New buyers coming in. Volume was actually higher in the April month, where it should be kind of dwindling going into the May contract. Take a look at the 30-minute. So here's where we opened. We drove lower. We tried to accept below weekly kickoff low, and that was swiftly rejected. What do we have? We have yet another late spike coming into today. Well, are we rejecting it? So far, I would say so. The base of the late spike is $2.26. $2.28, 226, 228. Yeah, 228, 229 here. So we did open below the base of the late spike. Here's the TPO chart. Lacey, chill, baby, chill. It's okay. I'll come love you up in a second. All right. Late spike, well, it's a normal variation day. B-shaped, indicating long liquidation. But we added open interest. Strange. We opened here and rallied. Leaving the late spike, opening below the late spike is a possible rejection of higher pricing. Our current regular trading hour session high equal to the base of the late spike. That's an interesting area. Kevin, I only have these going back. The Trade Evade platform is a little lacking in history here. I've only got it going back about 3 weeks here. Now, there may be a way, which I haven't really tried yet, to add total number of bars. You may be able to add more time to it. But on my 30-minute chart, I will usually keep naked points of control from the past on them. I don't know if I'll be able to find one for you right now, but want to get everybody ready for the equity open here. Good question, Kevin. All right. So we are going to take our deep breath, as we do every morning, to kind of clear our minds and get ourselves centered. I'm going to stay humble. I'm going to stay grateful. I'm going to stay creative. And I'm going to stay centered in my trading today. I'm hoping the same for you. Looking forward to a successful trading day for you. I've got to check out for the day as far as a lot of the live stuff, but I'm looking forward to having a nice, stable environment where we can spend a lot of time together. Looking forward to it. Get out there and profit today. Be patient. Be calm. Be centered. And good luck today. Trade well. Looking forward to seeing how things went. And I'll see you later. Blessings to you all.